Good evening, everyone. My name is Eric Bierbaum, and I serve as director of the Edmund and Lily Software Center for Ethics. And it's my great pleasure to introduce Chiara Cordelli, former fellow in residence. Cordelli teaches political theory at the University of Chicago with an affiliation in philosophy. Beginning this fall, she also is serving at Sciences Po in Paris as a researcher. Her work has reshaped debates about privatization, democracy, and capitalism. Her award-winning book, The Privatized State, argued that when governments hand over public powers to private actors, the problem is just inefficiency, it's illegitimacy. Among her many articles is one with the striking title, Distributive Justice and the Problem. She asks whether even our friendship should count in the ledger of justice, since they distribute advantages unequally. So if you brought a friend with you tonight, consider yourself on notice. She also recently published Freeing People, Restricting Capital in the British Journal of Political Science, where she makes the case that money deserves stricter border controls than people. And so she has published widely, co-edited volumes in philanthropy, edits Nomos, and will be holding her Nomos conference this Friday at the center. And so it's a pleasure to have her back with us this evening. And please join me welcoming Professor Cordelli, who's speaking on a very small topic, a very modest topic, and that is the wrongs of capitalism.
So thank you, Eric, for the kind introduction, and thanks very much for inviting me here. It's an honor, and I'm truly delighted, also because in 2018, I spent 1 year at SAFRA, and that is where I wrote the bulk of my first book. So I hope now that I'm presenting material for my second book, that this will bring me good luck. Given, of course, the state of the world, financial crisis, concentration of corporate power, increasing inequalities, worsening climate conditions, you name it, this has prompted a renewed attention about capitalism in all fields, and in particular, in political theory, in political philosophy, there's been an increasing interest on the question of what, if anything, is distinctively wrong with capitalism. And it is against this literature background that today my talk will try to pursue two goals. The first, I will provide a critique of the critique, which is something that one should never do. I will try to provide an account of the limits of what I take it to be the dominant normative critique of capitalism these days, which I will refer to as radical republicanism. I'll explain what that is in a second, and also of its implied and defense of economic democracy. But the point of doing a critique of the critique is not critique per se, but it's rather the hope that from the critique, dialectically, I can build a case to sketch an alternative normative critique of capitalism, one that has the core and distinctive feature of centering on investment and monetary valuation as beyond labor relations, as core to capitalism, on social alienation rather than domination or exploitation are the core diagnostic categories to determine what may be distinctively wrong or amiss with capitalism. They will try to present capitalism as a problem not only about justice, but about legitimacy, so as a political problem that will focus on something particular, which is the way in which capitalism privatizes control over the future, and that from all this builds a case for a more expansive form of economic democracy, or actually what I try to call democratic economy, in the sense it's not just about the extension of democratic principle to parts of the economy, but it's about the recognition that many parts of the economy are essentially political in a fundamental way, an insight, of course, that many feminists have also stressed. So just to provide a brief overview of what I take it are the main normative philosophical critiques of capitalism these days. First, we might think about the late roles, a distributive critique. Here the accent is on the fact that capitalism generates problematic inequalities, undermines fair equality of opportunities, undermines political equality, undermines a principle of reciprocity. The stress here is on distribution mostly, and it's a largely contingent critique, and the idea is that to overcome this problem, you don't really need to exit capitalism to core, but perhaps to distribute or pre-distribute capital ex ante more equally. Then we have an interactional critique. Here, the idea is that capitalism often generates a problem of lack of perfectly competitive markets. This means workers that don't have enough substantive options to exit the workplace, the work relations. This gives to the boss the power to oppress, the power to dominate at the point of production within the workplace. This critique is also, I take it, essentially a contingent critique, and it does not require, again, the exit from capitalism, but the provision of substantive opportunity, like a basic income, or certain restructuring of the workplace, like in the form of co-determination in Elizabeth Anderson's word. Then, of course, there is a very long tradition, perhaps the longest one, of analytical Marxism. The idea that what is distinctively wrong about capitalism is a particular form of exploitation, which is veiled by an appearance of freedom. Here, capital exploits by extracting surplus value from labor. More recently, there has been a revisionist version of this, that exploitation is, however, unjust only if it happens against an unfair historical accumulation of capital. I take it that this critique is distinctive. It aims to point at something that is peculiar of the mode of production of capitalism alone, but it's contingent to a large extent on the subjective disposition of the capitalist. Not every capitalist has to extract. Benevolent capitalism can offer non-exploitative, for example, labor conditions. Now, radical republicanism is not a coherent, unified view. So there are many strands of it, but it's defined by the encounter, so very intellectually, interesting from the perspective of intellectual history also, but the encounter of a Marxist traditional socialist trend and the birth of the resurgence of neo-republican, the idea that ultimately the core value is freedom, and freedom should be understood as non-domination, where domination is subjection to the arbitrary or discretionary power of will of someone else. So I take it that for radical republicanism to constitute a distinctive philosophical critique of capitalism, we should understand radical republicanism precisely on making the claim that there is a wrong of capitalism that is not distributive, not interactional, not contingent on the subjective preferences of the capitalism. What is this wrong? Is the fact that capitalism structurally and necessarily dominates, because by conferring through the system of private property to owners the power to unilaterally control the terms of labor, ipso facto confer to owners the power to dominate labor, labor that not owning anything must work in order to accept subsistence. So we see how this view is based on a particular reading of Marx. So the radical republicanism core thesis, I think, can be further identified in this way. One is what we may call the non-contingency thesis. So unlike exploitation, so unlike the analytical Marxist tradition, this is what makes this view distinctive. Domination under capitalism is not as contingent as exploitation because it's not contingent on the capitalist subjective disposition. The owners of the means of production, precisely like the slave masters, always dominate regardless of their disposition, just because ownership confers to them unilateral control over the terms of labor. The second thesis, this unilateral control amounts to domination, imposition of arbitrary will or arbitrary power, and this is why capitalism is unjust. To overcome these injustices, we need to collectivize workers' ownership of the means of production and give to workers control over the labor process. And finally, domination under capitalism is not interactional, it's structural, both in the sense that it is enabled by the system of property, but also, as we will see, in the sense that capitalism, qua a structure, impersonally dominates. So, what I'm going to do here is to first try to show that Republicans cannot defend any of these theses, and so one may question whether, if you are inclined to defend a form, for example, of democratic socialism, of democratic economic democracy, you should take republicanism as your intellectual ground. And then, from this critique, as I said, I will try to sketch an alternative critique. So the first part will be a slightly more technical and analytical, hopefully, not too boring. The second part a bit more aspirational, perhaps provocative. So in order to think about whether really there is an advantage of republicanism compared to analytical Marxism, domination is less contingent of exploitation, we need to ask, do owners really always dominate? I take it that the view that owners always dominate in the works of some radical republicanism is based on a precise economic account of how capitalism works. And this is important because unlike in other fields, I think, political philosophers have talked about capitalism, but rarely they provide an analysis of the economic account. So Rawls, for example, use capital continuously interchangeably with income and wealth. And there is really no theorization of capitalism in many of crucial political, very influential political philosophers. But here is a radical Republican understanding of what capitalism is and how it works. I use the words of Nicholas Prosalis, quote, because the seed corn, so the means of production, is concentrated in a few hands, so is the value of the net product it helps produce. And since unilateral control over the net products confers unilateral control over labor through the labor market, the seed corn, the means of production, becomes something it was not in a non-capitalist economy, namely control over person in the form of control over things. So what are the assumptions of this economic account? Well, the assumptions are these. One is that savings from past labor, so the owned means of production plus the extracted profits, are sufficient and necessary to continue the process of production. So as a capitalist, because I own property, I can control labor, I can extract profit. Because I can extract profit, I can use those profits automatically to continue the process of production. And therefore, unilateral control over these savings in the form of ownership rights over the product of past labor is sufficient in this account to confer to the owner the power to unilaterally control labor. Unilateral control over labor, as we saw, amounts to domination. Private ownership is therefore sufficient for domination, and therefore always, owners, by definition, always dominate. But there are some questions we may ask about this economic account. First, if we follow a Keynesian line, we may say that past savings are neither necessary nor sufficient for further production, because under capitalism as a complex overall system, no further production is really possible without the capitalization of past profits and the means of production themselves. So by capitalization, we can think of capitalization as a mode of valuation where assets or goods are attributed monetary value right now on the basis of their future returns and profitability. So think about the loss of 2 million jobs in the 1980s in the Rust Belt. According to at least some historical interpretation of the facts, there was no change in the rate of exploitation, no change in the availability of workers ready to be exploited, no changes in the intrinsic inherent value of machine, of the means of production used by the manufacturing companies. But what happened is that partly in consequence of the Volcker shock, given rising interest rates, investors' expectations about the future, investor expectation changed, shifted, and investors took their investment away from manufacturing. They used money as a store of value to hoard or speculate, or they moved their investment somewhere else, and the manufacturing companies did not have anymore the capacity to continue the process of production. Now, if this is true that there has to be capitalization to further production in most cases, then it also seems true that which assets are capitalized depends on the volume and direction of investment, but the volume and direction of investment depend on investor subjective expectation about the future, not just past accumulation, as the example I was trying to name shows. So it seems that the capacity to produce, and thus the actual power to control labor, depends on investors' subjective expectation and disposition about the future, not just about past accumulation. We can make another example as a paradigmatic example, like of Lyft, the car-sharing company. If we think about the monetary valuation of Lyft in the stock market when it went public, was billions and billions of dollars, but Lyft wasn't profitable at the time of the valuation, not accumulated profits, and it did not even own the cars that were used. And so large part of the valuation in part depended from not ownership per se, but the investors' expectation on a future with low car ownership. And again, in this sense, one may argue that perhaps past savings in some cases are not even necessary to support further production. So why is this economic story matters normatively? Well, it seems to me because if the acquisition of the power to keep producing and those to control labor depends on the capitalization of past profits and of the means of production, and if no capitalist has unilateral control over the process of monetary valuation, then ownership rights to control the use of the means of production and the product of past labor cannot be sufficient to confer to the owner the power to unilaterally control labor. Therefore, private ownership is not, in fact, sufficient for domination, and owners are not like the slave masters cherished by the Republican tradition, and they do not always dominate. In fact, the power of interference of the owners of the means of production, unlike the master power, is conditional on and mediated by an external process of monetary valuation through investment that the owner and no owner unilaterally controls. So I take it that this shows that ultimately domination is as contingent as exploitation under capitalism. It's true, the radical Republican can say, but there is always some domination under capitalism. But the radical Republican must also say that there must be some exploitation under capitalism because the reproduction of the system, according to their economic account, depends on that. So then what the radical Republicanism to maintain its sort of philosophical advantage over analytical Marxists should say is that the total amount of exploitation is contingent on subjective disposition, but the total amount of domination is not. But as I have tried to show, this is not true because the total amount of domination is also contingent on subjective disposition. They're just the subjective dispositions of investor, not the subjective disposition of employers. And so I have to confess that what interests me of this story is not so much to show that domination is as contingent of exploitation, but precisely the fact that when you start taking monetary valuation and investment into account, the normative story about what might be wrong with capitalism, the diagnosis starts shifting, and this is central for further argument later on. But let's turn now to the core thesis of Radical Republican. Imagine that you disagree with what I've said. We still need to ask, do capitalists dominate? Because here is where the core of republicanism rests. And I think they intuitively do. We all want to say that they do, but I think that actually republicanism is not entitled to make that claim, and this is why. So the Republican tradition defines domination as a subjection to someone's arbitrary power of interference, where interference is understood as the removal, replacement, or misrepresentation of options for choice. But capitalist employers, it seems to me, even when they offer you terrible jobs, if we assume the property system on the background, they are adding an option. They are not taking options away. And importantly, as long as formal exit is available, the employee remains free to return to the original baseline of options. So even terrible working conditions do not actually reduce that baseline. So I take it that whereas we can say that capitalist employers wrongly and blameworthy can exploit and can oppress, they cannot dominate in this freedom undermining sense. So one could say, well, but look, domination is not about the capitalist at the point of production. Domination is at a prior distributive stage. What is domination is about is the exclusion of a consistent group of people from the control of the means of production. And that is what arbitrary interference consists in. Why? Well, because the exclusion of some from the means of production through the property system forces non-owners to work for owners under exploitative conditions. But it seems to me that if this is the story, and it's a familiar story, interference and exploitation do all the normative work. Domination is a completely redundant notion. What the problem is that by depriving some people of resources, you force them to do things they would not otherwise like to do. And we have notions of negative freedom to make that case in full. And finally, briefly, but one could say, well, maybe domination is still something else. It's capitalism, not capitalists, and not the system of property that dominates, but it's capitalism as the market. We are all dominated by the market, an impersonal aggregation of arbitria, which renders even the capitalist incapable of free, responsible action. There has been a recent resurgence of this claim that comes also from reading of Marx that are closer to the value form reading of Marx. That have been revived to argue for the idea that capitalism as a market system dominates impersonally. So I think the problem with this view is partly that the investment process cannot be reduced to a market, but regardless, even if you put that aside, I think that the notion of impersonal domination is incoherent. And I provide you quickly, briefly, two reasons. First, domination is really about power. Someone claiming equal status by having arbitrary power on someone else. So it's an inegalitarian concept. But it's hard to see why being subject to an impersonal structure like capitalism would generate any inegalitarian concern. I mean, if if capital is distributed unequally, but there is no inegalitarian concern that is per se triggered by being under an impersonal structure, right? And second, if it's true that the law of valuation or markets or preference aggregation or market competition compel all of us to act according to the laws of capitalism and therefore we're not responsible, then in what sense is capitalism unjust? Or in what sense can capitalism unjustly dominating? In this case, capitalism seems to be closer to a hurricane. A hurricane may be bad, may cause bad consequences, but is not unjust because no one is morally responsible for it. But Republicans want to say, of course, that domination is an inherently unjust. A domination that is not unjust is not domination. Therefore, I take it that capitalism, if really impersonal and compulsory, compelling people to do certain things, cannot dominate. And so also the third thesis, the structural justice thesis, remains, I think, unsupported. This creates problem for a Republican case for economic democracy. But even if we assume the domination arguendo is the issue that is the core of the problem with capitalism, I take it that we still need to ask, in order to defend the kind of economic democracy that radical Republicans want to defend, is economic democracy really necessary to overcome domination in the labor process? And I take it that in order to show that it's necessary, one needs to have an argument, an explanation for why higher level of democratic authorizations are insufficient to render the capitalist discretion non-arbitrary. If we think about a democratic vote that authorizes a capitalist system, a capitalist labor market, why is that not enough to legitimize, to render the capitalist power non-arbitrary? And I think if the answer is because democratic authorization is insufficient, because workers, qua citizens, have negligible causal influence on political decision, and therefore can never force through democracy as such capitalists to exercise their power in a way that tracks their interests. If this is the answer, I think the problem is that then economic democracy is not sufficient to overcome domination, because this same problem arises at the level of production, even within corporation, even within cooperatives. No individual worker has sufficient power to force the capitalists to track their interests. So why should we go beyond republicanism if one wants to construe a normative critique of capitalism? Because I take it that perhaps analytical, traditional, old, boring analytical Marxism is best placed to explain what's wrong with labor relations under capitalism. Radical republicanism may also be insufficient to justify the democratization of the labor process, but most importantly, I think, is that capitalism is not just about labor relations, and the mode of production is not just about labor relations. So radical republicanism, even if correct, would provide an excessively narrow critique of capitalism and an excessively narrow account of economic democracy, because it leaves an important fourth part unaddressed. What is this part? I take it that it's investment and monetary valuation. So what I'm just saying, if there are like historians of this is very quick, and also, as someone who's more in philosophy, it's hard for me to justify it, but I think it's perhaps an interesting to think about the distinctiveness of capitalism in this way, and to explain why investment and monetary valuation are central to it. One is that we might think investment plays a crucial role in what makes capitalism economically distinctive. And here I'm relying on work from recent Keynesian, also some like Becker, Imagine Future, Orlean, Veblen, Keynes, and other. And so here the idea is that investment, thanks to institutionalized credit, under capitalism and only under capitalism, makes production possible even when savings are absent. And because of money as a store of value, not just a means of exchange, it prevents production even in the presence of savings. So going back to the lift example, to the manufacturing example. But investment also plays a crucial role in explaining why perhaps capital may be conceptually distinctive from wealth and from income. The reason is that wealth is a static concept, capital is a dynamic concept. And so if everything that could produce was capital, capital would become an overblown concept. So what is the specificity of capital? Perhaps it's precisely the process of asset valuation of capitalization that transform inert means of production or inert object of accumulation into productive assets through a future-oriented mode of valuation, which leads me to think that investment is also central to the temporal distinctiveness of capitalism. Production under capitalism is also dictated by expectation about the future, and because investors make claims on future returns, then there is an incentive, of course, to shape that future according to those claims. And so we may say that production is oriented towards fulfilling investing claims made on the future, not towards present consumption alone, and investor expectation about an open future, not just past accumulation, determine the economic present. So if we think that an account of what might be distinctively amiss with capitalism must relate to what makes capitalism a distinctive social and economic system, I think we arrive to the question of what might be amiss or wrong normatively with being subject to the capitalist mode of investment and normative evaluation. And here, very quickly, I think the best way we might think about the capitalist mode of investment is as a form of impersonal governance. So I use the term rule improperly. It's not about authority, but it's about governance. So why the mode of investment govern? Because the investment process makes basic structural or transformative decisions concerning the course of a society. Investment affects rates of growth, what will be produced, what job will exist, whether green energy or fossil fuels will be produced, therefore the material, cultural, social composition of society. Why is this form of governance a rule of known? Because I take it that investment patterns do not express the will of an identifiable collective agent, team, or class, because investors do not qualify as such. The reason is that even if, without denying that there is massive inequalities of control over investment, without denying the power of asset managers and all the rest, the fact is that investors do not share intentions. They don't have shared awareness of shared intention. They don't have a shared plan to fulfill a common end. They lack, therefore, the features to qualify as a collective agent, and I would say even as a class or as a team, to be able for us to attribute investment patterns to them. So further, everyone is subject to the process of monetary valuation and market competition, such that whether investors' decision can be regarded fully discretional or to what extent, so that we could see them as voluntary or discretionary choice of particular agents, can also be put into question. So the best way of making sense of the investment process is, as I think, as a form of ultimately impersonal governance without denying inequality of power within this system of governance. And however, as I argued, if that's the case, we cannot say that what's the normative problem with being subject to the mode of investment is a form of domination, Because, as I have argued, I think the notion of impersonal domination is internally and conceptually incoherent. So how should we think instead about this problem, the problem of being ruled by an impersonal machines that make transformative decisions to which we are all subject? To answer this question, I think we need to be a bit more precise about maybe certain feature of what I call the capitalist mode of investment. One is what we may call, I think, privatization or depoliticization. It seems to me that this is an undeniable defining feature. So the fact that in this system, major transformative investment decisions are left in private hands and made accordingly to expected returns. De-risking, the state can incentivize, can do certain things, can give tax credits, but ultimately the system is highly privatized. The system, I think it's also anarchical in a technical sense, and the technical sense is because it is uncoordinated and because it's a mimetic process. So I need to invest trying to guess what an investor will invest in. And yes, there are economic models that allow us, but ultimately, if radical uncertainty is an ineliminable feature, this future probability cannot fully mathematically measured. So it's a mimetic process in which I try to guess what other people do and invest accordingly. It's an uncoordinated process, and it happens under condition of radical uncertainty. And so there is no guarantee that investment will follow a pattern that won't lead to waste or all the problems that are familiar from sort of the literature on productive anarchy. So if these are the descriptive features of the capitalist mode of investment, what are the core normative features? Well, I take it that because of the privatization of investment, citizens cannot be reasonably expected to understand and affirm large parts of their society as the result of their collective doing and valuing, rather than as the product of a largely impersonal and uncontrolled market force. So privatization means that I can understand the structure of society that results from investment as something that I have authored. Anarchy means something else, means that citizens cannot be reasonably expected to understand their society as an expression of a deliberative process, of their reflectively endorsed priority, or as something that is not just the outcome of a casino game. So they cannot understand their society as an object worthy of their affirmation. So we have no authorship, no collective authorship, and no fitness for affirmation. So what is the problem then? Again, I don't think it's a problem of domination. There is no dominator. It's not a problem of relational equality, because the market is, because the system is impersonal. I think it is not even a problem of authoritarianism understood in the sense that we are subject to decision we could not reasonably consent to. And the reason why I think subjection to this impersonal form of governance cannot be reduced to a problem defined like this is shown, in my view, by, I mean, if we make one of these far-fetched examples that analytic philosophers like, right? But imagine that you delegate, or in any case, give some the power to make transformative decisions about your life, right? Whether to have children, what career to pursue, to a computer machine. And the computer machine is rational and transparent, and it makes this decision nicely. But your life is ultimately ruled and governed by this computer machine. Maybe you retain the right to decide at what time to pay a bill, but you don't retain control and involvement over this transformative decision about your life. What would be amiss to be subject to this computer machine? Not the fact that the machine makes decisions that we could not reasonably consent to, because we can assume we could reasonably consent to this decision. But I think that the problem with the subjection to the computer machine would be better understood as a problem of alienation. Because the person under the computer machine would lack ongoing involvement in transformative decisions about her life. The agent subject to the computer machine would be unable to understand and to affirm her life as her own, that is, as the result of her authorial agency and as expressing her own endorsed and revisable priorities. And I think because she cannot relate to her life in an authorial way, she will relate to her life as an alien imposition. And because she cannot relate to her life as something that she can affirm, she will relate to it as something alien to her. So the agent stands to her life in an alienated, non-authorial, and non-affirmative relation. And the phenomenology of this situation is a phenomenology of powerlessness and detachment. We can imagine the agent doesn't care anymore about their life because their life is decided by an impersonal machine. It's not a problem of ingratiation. There is no way in which the subject could ingratiate the computer machine to begin with. So there is no problem of, that is phenomenologically what Republicans use to identify instances of domination. So I take it that capitalism, in some relevant sense, of course, now is very close to the computer machine in this respect. And the problem is one of social alienation. Due to the privatization of investment, citizens under capitalism cannot understand their society, which largely results from past investment decisions, as the result of their collective doing and valuing. They cannot relate to it in an authorial way. Due to anarchy, they cannot affirm it as expressing their reflectively endorsed priority or as an object sufficiently rational to be fit to be affirmed. They can only understand it as the result of an impersonal and largely irrational force. So capitalism, like the computer machine, structurally generates an alienated relation, non-authorial and non-affirmative, between citizens and their socio-political order. And again, it's important to stress how the social alienation is a direct consequence of the privatization of control over the future. That is what crucial to understand why the phenomenon is one of alienation. And I think when Trump put the tariffs at the beginning and the Financial Times entitled, there was an article, Trump Zero Markets One. Like, there was, a moment for some of joy, but ultimately was a sad joy because you were joyous that stock markets have overruled a collective political decisions. I mean, in some sense, you could ask yourself, is it better to be dominated or just alienated, right, by an impersonal form of rule? And I think the important point here, however, that also in the socio-political case, the phenomenology is not one of ingratiation. You don't ingratiate yourself to the stock market, but is one of powerlessness and ultimately detachment. I should probably try to conclude, but and also it's quite dense already, but very briefly, maybe I can sketch where I'm going with this. So I think in line with the now revival of also post-colonial theory, that non-alienation has both historically played and should philosophically play a role in justifying the case for democratic rule. Ultimately, we have an interest in jointly authoring political decision because we have an interest to relate to the socio-political world as a non-alien object. So if it's true, and I leave it like in conditional here, for lack of time, the non-alienation plays a fundamental role in grounding the case for political self-determination. And if it's true, as I think it's plausible to think, that political self-determination should be exercised compatibly with its own grounding values, should not be exercised in a way that defeats its own case, then capitalism, if it is structurally and necessarily alienating for the reasons I have argued, contradicts democracy, contradicts political self-determination, not in the mere contingent sense that it affects political equality or captures the state or make the state into an instrument of capital, but in the quite fundamental sense that democracy should not and cannot validly authorize capitalism because capitalism is incompatible with the values that ground the case for democracy. Therefore, even a democratically authorized capitalism may be illegitimate even if it's just. And I think this is important, one, because we don't think about capitalism generally as a political problem, we think of it more as a social economic problem, and also because we might think sometimes there are cases for modifying things that are illegitimate, even if they could bring good outcomes. Right? We wouldn't want, the usual example is like, we wouldn't want Canada to take over the US, even if that could improve healthcare, because we might think that the value of political self-determination has some weight beyond like the outcomes that it produces. And in this same way, we might not want a democratically authorized capitalism because it's illegitimate, even if it turns out that capitalism produces some good outcomes. And so, and I have the last two slides, and then I'll conclude very quickly on more the institutional part. So why this story prompts a revision of the case of economic democracy? Well, because the point of economic democracy is no longer seen as the overcoming of exploitation, or not only as the overcoming of exploitation or domination at the labor level, but rather the point of economic democracy is a process of disalienation, which is economic democracy the end of economic democracy should be to establish an authorial and affirmative relation between citizens and their society. This also necessarily means that the scope of economic democracy has to be broader than the labor process. It must include investment. And the demands of economic democracy must be broader than economics' control over labor, and they must include popular control over investment. So what does it lead us? Well, we need some form of planning to overcome anarchy, some form of value pluralist deliberation to overcome monistic valuation, and ongoing participation to provide the condition of agency involvement over time, and therefore the condition necessary for affirmation, as I argued earlier. So what this could look like, so I take these slides as to be an appendix more than part of the talk, because I've not developed, a full institutional design, and I think there might be a way of thinking about democratic planning in different terms, different models that would be compatible with the desiderata I have sketched. But we can think, so in terms of what we can think about first a democratic, centralized establishment of investment priorities, which is not just about de-risking, but it's about increasing public investment. It's about establishing the rate of investment and general investment priorities in a more democratic and centralized and deliberative way. A national investment authority, as in the model defended by Oket and Omarova, or a planning commission could be possible option. You need a system of public banks to allocate investment accordingly. That has to be coordinated. and importantly, a set of decentralized participatory entities in the form, for example, of mini publics to then implement these investment decisions. This model per se and the normative desiderata that I try to sketch are not incompatible. We retain some role for an exchange market to overcome inefficiency problems. So you could have still a market that would send information about what people want and what they need, but it would take out of private control a lot of what today is in private and again, not just through a system of incentives. So thank you very much, and I'm looking forward to the conversation and the question.
Thank you, Chiara, for a marvelous and generative lecture, and wonderful to see former and current fellows in your footnotes and citations. Some of them may have questions here, and others. So let's start. Iman. Yeah.
Thank you for the simulation talk. I have several questions. I'll ask the one since it's pressing due to my work right. So I'm not sure I fully understand the critique of the Republicans' claim of non-contingency. So here's my concern. I always thought that the way I understood the Republican concept of domination, it's supposed to be a fully modalized concept, right? So what matters, what determines whether Agent A is dominating you is not what they're actually doing, but what they're doing in a relevant set of counterfactuals. So, you can give the owner of capital benevolent motives, so they're not extractive, they're dividing the pie, the cooperative surplus relative to some independent ideal of fairness. But still, the fact that in nearby possible worlds where they're rationally self-interested, they'll be exploiting you, right? That's what determines domination. So why can't the Republican absorb your clearly true observation that the capacity in the actual world to extract cooperative surplus is contingent on investor subjective dispositions as follows? So the Republican will reassert the proposition that give the actual agents, both investors and owners of capital, whatever dispositions you'd like, indeed benevolent dispositions, right? So the investors are investing just like the National Investing Authority, and the capitalists are all sort of paying a fair wage. Nevertheless, you have domination because in nearby possible worlds where they behave in purely rational, self-interested ways, they extract, right? So isn't that a clear enough sense in which domination is not contingent on actual subjective dispositions of investors or capitalists?
Yeah, so thank you. So two things quickly. One is that some Republicans deny that. So deny that capitalism are necessitated to extract at the individual level. And I think in this respect, they are right, because even the Marxist claim is a claim about average. So it's not the claim, and it's a claim about the long run. It's not a claim that every capitalist at every second moment, in every moment, extract. But for the non-contingencies claim to go through, you need, and for exploitation to be non-contingent in that sense, you would need to adopt the thesis that capitalists are all the time compelled to extract. And so someone like Nicholas Broussalis, I think, deny that claim, but on the basis argue that whereas you can find benevolent workplaces in capitalism because capitalists are not all the time compelled to extract, however, they are ipso facto dominating by the mere fact of having the... There are other radical Republicans. I'm thinking about Alex Gorovich, who's here, who in a great article in 2024 has argued that, however, we are necessitated by the structure of capitalism to extract, and to dominate is non-contingent. But I think that view has an opposite problem among others, the fact that, again, first of all, it's not true that investors need to have the intention to extract and dominate, I think, all the time. And that, again, you can think about, I don't know, was thinking about Brett Christopher's example about why investors say invest in not enough in renewable energy and continue to invest in fossil fuels. The answer has nothing to do with exploitation. The answer has to do, in that particular case, I think, with a story about price volatility and the fact that there is therefore no guarantee of future returns for certain kinds of investments. It's about how risky certain kind of investments are. That has to do with expectation about the future, not with an intention to extract or what is more exploitative. So so I think that's the answer I would give for why.
Thanks very much for your talk. So you raised this dilemma for the Republicans on the top of the third page, I guess. You say, well, why is economic democracy really necessary? Can we just say that as long as there's sufficiently high-level control at the level of the state, then we don't need control at the lower level? So I thought, why can't somebody make the same objection to you? Say, well, look, as long as the state is somewhat regulating investment, sure, they can ban certain kinds of really harmful investments in, coal or whatever it may be, or they can make various. But when it's not really damaging, they'll just delegate to the capitalists. Then you might say, no, that's not good enough. It's still going to be too alienating. We need to have really, really strong control. Each individual person needs to be really involved. But then somebody might say, well, and then I worry that these. The kind of things that you propose, the local banks and things, are not going to be sufficient, because it's still going to be the case that the average person has very little control over the aggregate investment decisions that are made in the society. So isn't there the same dilemma that the kind of radical investment democracy that you propose seems either not necessary or not sufficient?
Yeah, I think, one very quick answer I will give. I think here domination and alienation are structurally different. In the sense, I think, let's go back to the computer machine example. Right? Imagine that I delegated, only 1% of transformative decision, or 2% of the transformative decision about my life to the computer machine. Or imagine that I delegated them just for very short amounts of time. You might think that there is a sufficient level of involvement in making transformative decisions about life, and a sufficient scope that would be sufficient for you not to be alienated about your life. If you will, in this sense, alienation is, I don't know how to put it, I don't want to say aggregative, but it's a holistic kind of notion. Domination doesn't work like that. Like domination, you are either dominated or not. We could think about whether there are scalar notions of domination, but the point is that if you, in a co-op, the co-op is so large that you lack causal influence on the outcome, then you will be dominated for any decision simply because you won't have the enough power to track, to force the tracking of your own interest. So I think, I think they're internally different, and so maybe a way of putting it is a minimizing approach to alienation works, whereas a minimized approach to domination in that sense doesn't. But thank you.
I have Alex and then Doris.
Thank you, Chiara. This was super interesting. I had a question for you about how to interpret the rule of none idea. So at one point you say that one way of understanding the wrong of capitalism and why it's alienating is that there's the rule of none. The direction and volume of investment ends up in some allocation that no individual set of individuals could have intended, and doesn't therefore seem to have followed any rule whatsoever. It's just this sort of arbitrary, uncontrolled, uncoordinated outcome. But then at another point, it seems like there is a rule that is governing investment profitability. All investment shall follow this same rule, that it be profitable. Now, what people think is profitable at any given moment might itself be a little bit more arbitrary, but there's the rule, all investment, and then it's enforced through a set of institutions, namely the way in which investment markets, capital markets, production markets, asset markets create competition among owners of capital that induces them to invest on the basis of what is profitable, because those who don't invest on the basis of what is profitable will be selected out. So, but in that case, there is a rule. It's been established, it's institutionally enforced. It's the rule that all investment shall be governed by profitability. And at one point, you even emphasize that this is one of the problems, is that it leads to monistic ways of conceiving the kinds of values that investment should pursue. So in that case, there is a rule, it's enforced collectively through the state by protecting private property and by establishing, sometimes even actively promoting competitive markets. And that's a little bit different than saying there's a rule of none. There's a very specific rule that investment does follow, and that seems to be the problem. And we might even say we've imposed it on ourselves by continuing to legally enforce it.
Yes. So I think I agree and disagree in the sense. On the one hand, it seems to me that certain readings of Marx are more correct in saying that maybe there is a law of valuation that is not so much under political control. You don't really vote on whether investment is governed by returns. I mean, there is in the investment process is culturally embedded, is guided in part by ideologies, it's legally framed in part, but the law is not the only thing that is part of this process. So maybe some part of it you could politically change them, but there might be a law of valuation that partly escape in this respect, at least normal standard reformist politics, so to say. So I would say that. But even if that's not the case, the fact that we have imposed it on us once doesn't mean that it's a rule of someone. Like in the case of the computer machine, I made the example of at 18, you ask the computer machine to make all the transformative decisions about your life. And then at 60, you don't recognize your life anymore as your own. And it's true that you delegate it to the machine at 18, but the machine is still then acting as a rule of none in the sense that the attributability of those decisions cannot be no longer reconducted to the agent. And finally, very quickly, however, I agree with you that it could be originally politically sanctioned, but ultimately substantially is a form of rule of none. And that matters in my view because even if we assume that what I said is false, in terms of not being able to attribute investment decision to an identifiable collective agent. So imagine that there is a collective agent that we can identify, right? There are 5 asset managers, those we attribute to them responsibility for investment patterns. It's still the case that if it's true to think about the compelling nature of the law of valuation, then their action could not be fully regarded as discretional. And it seems to me that for domination to occur, you need the action to be discretional. Because if I'm dominating you because someone is compelling me to dominate you, you are not subject to my will. You are subject to the will of those who compelled me. And so in that sense, again, the group agent does not dominate you, even if we can, in some sense, attribute certain decisions to it. So that would be my hunch.
Doris.
Thank you. You can hear me.
Yes, anyone.
I very much appreciate your concern about computers making decisions. And that encourages me to ask you if the alienation doesn't include thank you. If the alienation doesn't include an alienation from some human faculties that atrophy when computers are making decisions. And I'm thinking specifically of imagination. If we are we alienated from the capacity to imagine scenarios, businesses, decisions in business that are not yet visible. In other words, does a business make decisions about immediate profit or sustainable profit? In what fields? For what purpose? Where is the citizen's capacity to deliberate if one does not imagine a range of scenarios? So that's the question that
Yeah. Yeah, thank you. I mean, this is a great question, and I have to say it's very important for me because one of the, at least inspirational sources for this project for me was this book by a sociologist who I actually have never met, Jensberg, Imagine Futures, where I think the main point is that investment is driven by, because of radical uncertainty, investment cannot happen through mathematical calculation of probabilities alone. So investor needs to act on imaginaries of the future. And of course, what construct these imaginaries is not just models, but could be ideological component. Think about, the baby booms or cultural factor, religion, all sorts of things and at the same time, investment is a self-fulfilling prophecy in the sense that then if you invest on the basis of imagined future, you make those imagined future more likely to be actual futures because investment support the capacity for production. Production is going to be directed to the realization of those future. It's going to be directed to make through the claims of investors to future profits. And so what you have is not only that investment has the power to make the world materially, but has also partly the power to narrow the ability to imagine possible future, directing it only to certain futures that are compatible with the law of valuation. And so in that sense, I don't know if I would call it an atrophy of the capacity for imagination, but it's a reduction of the scope within which that imagination can operate, because the imagination itself is directed to only imagine certain kinds of futures rather than others. So, yeah, I think the question of imagination is very, very important.
Sahar.
So thank you so much for the talk. I enjoyed it a lot and gave me a lot to think about. And I want to preface my question by saying that, I'm coming from way outside of this discussion, so apologies if this is lots of question. But 2 questions ago, I started worrying about this, that the rule of none would be a little too generous in terms of finding problems, to the point that any deliberative mechanism that is in an open society with inflow of people and it's scaled enough would be subject to similar set of problems, because deliberation also is happening most of the time locally, or it happens at intervention. Still has a lot of components that can be alienating or not make sense, or big swaths of people, and get us back to say normative problem that we face. Or at least, if I want to ask it in another way, how would we anticipate that, acknowledge that possibility, not worry about it.
Yeah. Yeah, I mean, I see the problem, and so I always return to the general desiderata for thinking about, showing how I'm thinking about this, right? So one, because I think this highlight different reasons for why deliberation is important. So once deliberation is important, because unlike monistic valuation, deliberation opens up decisions about investment to a plurality of values. So rather than future returns, you have more space for environmental value, whatever, cultural values. So that's an importance of deliberation. The second, and then in that sense, this deliberation is instrumental, but there could be alternative means. But I think is important is agency involvement, the fact that you actually have to be there and participate. So the value really is participation. Deliberation is a mechanism to achieve that. And then there is deliberation as a mechanism of control. Again, deliberation there is not the only possible means, but I think politically is the... So in order to achieve this, the deliberation would have to be organized, I think, first of all, in small units and recurrent. So I was thinking, as I said, I didn't get to the specific of institutional design, but I think sortition might be an important part. You need a rotation that and smaller community where people have a high chance to be able to participate. And then there have to be recursive system that kind of connects the deliberation to the higher centralized choice so that you don't feel just you are kind of the bureaucrats who's mechanically implemented this decision at the centralized level. So one thing is localism, but one thing is a plural federalist system with recursive mechanism of chains of connection between the centralized level and the low level. So at the moment I can only say that, but I see the point, right, that not all it's not enough to say deliberation and for the problem of alienation to be solved. Yeah.
Tommy.
Thanks. Super interesting, stimulating talk. I guess I want to follow up on the way you responded to Adam's question, just because it seemed like you were opening up space for a degree of joint ownership with respect to our lives together, right? And then I wanted, in a way, I'm inviting you to talk a bit about how you think about that, because you might think, well, we live in, we're talking about mass society, very technologically based. They're choosing to live like that brings lots of things with it, and including the scope of joint authorship might shrink as we decide to if we're going to live that way in these large scientifically based, technologically based societies. So I just wondered if because I could imagine someone thinking, well, this is a matter of degree. There are things where we can have, true joint authorship over, and we do that through law, through administrative institutions, and so on. And we can, but there are limits to that. So is your thought? Just wanted to clarify more. Is your thought that because of the role of investment in our lives together, and it is governed by the market, it's just the scope of it. It's like such a huge part of our lives together that wherever you want to draw the line between the acceptable degree of joint authorship and an unacceptable degree of alienation, we've gone too far, because it's just taken up too big a part of our lives together to see that. Or am I misunderstanding the basic line of argument?
No, that's exactly correct. So I will say two quick things. First, that I haven't given an argument, and it's a contentious argument, but what I want to say is that investment is special, and not all economic decisions in this respect are equally political. So, for example, I don't think that this is not an argument for the socialization of consumption decision. And the reason is that, and this is where the controversy comes, the idea is that investment here is primary for two reasons. First, because investment to some extent almost set society's ends, or at least its ability to fulfill commitments. So think about the paradigmatic example is environmental commitments. If investment goes to fossil fuel, there is nothing you can do to meet those commitments. And because of the imagination and the future, also our vision as a society of what future we might want to achieve is very much also directly influenced by investment. Consumption preference, one might think, are in part endogenous. So if investment decides that we're going to have a lot of gadgets and not a lot of food, I develop a lot of preference for gadget. But if investment doesn't go into gadget production, then my space for developing preferences and taste for gadgets is low. So in that sense, because of the basic structural, in these two senses, primary nature of investment, I think that joint authorship is very important there, but it doesn't mean that it's very important everywhere or in all aspects of economic life. And then second, I don't know, I really think it depends on why we think joint authorship is important. And here, I try to give a story why I think the way we relate to the external world, we don't want to be alienated from this, is why joint authorship matters. And if that's the case, maybe too much technology is bad. But if you think joint authorship instead is grounded on some thinner value of just control, I don't know, or maybe technology would enhance our ability to act as joint authors. So I think that a lot depends on this argument of what grounds our case for joint authorship if the interest of non-alienation. And if that's true, I think you need involvement. And so, online voting, all these technologies might become problematic from this perspective.
Yes, in the back, please say your name.
Hi, my name is Jasper. Thank you so much for this. And I apologize if this question, I think it touches on several points that have previously been made, but I hope it builds on it in some way as well. My question is about the concept in conceptualizing economic democracy. How do you think about avoiding some of the pitfalls and the risks of majoritarian domination? In my mind, when I think about some of these options, and I really like the creativity, particularly near the end of the presentation, which you acknowledged are still in working form, my fear is that there could become a minority that is permanently dominated by a majority within a system, even getting creative with the systems of democratic engagement and recursiveness there. And so I could imagine a minority essentially being locked out and subjected to alienation in the same way as exists in the current system. So I would appreciate sort of any thoughts you have around getting around this majoritarian difficulty.
Yeah. So I think, two quick things. So what I would say is that representative democracy can definitely be alienating. One way in which can be alienating is by creating permanent minorities, or by being corrupted, or by being, but these are all deviations from the ideal. You might think we don't care about the ideal because it's never existed, but I think it's important because the idea of representative democracy is not structurally alienated necessarily. So if this argument is correct, the idea is that the idea even of capital is structurally alienating. And so the problem of permanent minority is a problem, and it can lead to alienation, but I think this is why so many democratic theorists have argued for ways in which voting systems, constitutional constraints can be set up precisely to compatibly with democracy to limit that problem. So that would be the.
Hi, Chiara. It's great. So I was interested in hearing a little bit more about the sense in which capitalism is alienating. So imagine we're in an agrarian society, or not even, agrarian society, and I'm a farmer, and I plan my life according to what I expect is going to happen with the weather. Right? And the weather controls a lot of what I do in terms of determining when to plant and things like this. Now, I take it, on your account, you wouldn't say that I'm leading an alienated life in relationship to the weather. Or maybe you would, I don't know. I'm trying to, right? and I'm not sure how much rests on that, because then we have to say more about why we care more about certain. So if I am alienated from the weather on this account, then we might want to say more about why that alienation somehow, is not something that we worry about as much as, say, in alienation to the investment decision. Or we might say, no, that's not alienation because in principle, that's not something we can, now, assuming now we impact the weather, but assuming for the moment that we can't impact the weather, right? Say that's something that we can control in the same kind of way, whereas in the capitalist system, we're alienated because that's a kind of social arrangement that in principle we could do something about in how we organize it and things like that. But if that's the case, then couldn't we sort of legitimately authorize capitalism as a form of how we want to live our lives? In which case, then it's not inherently alienating?
Yeah, so I don't know, let me see if this answers your question. I'm not sure if it answered the second part. So I think that gravity or the weather do not rule us. They're impersonal, but they constrain us. They limit the background conditions within which we can rule ourselves. What does that mean? The weather doesn't set our ends. Gravity does not set our ends. Gravity influences the fact that as my own end, I cannot have the end of flying. If by that investment is a form of governance, in the sense that it sets the ends of society by also creating the kind of future that we can imagine we are moving toward, etc., then there is an end setting, we may say, element in investment that we are not finding in gravity or the weather. So I would say, right, it's impersonal, but it's not ruling. On a more speculative and broader point, I think here the point is that, so the weather, we can't do anything with the weather. We cannot control it, we cannot do anything. But I take it that capitalism as if you think, developed historically through an idea of modernity, where a new idea of freedom comes into existence. This freedom is precisely the idea that the world is not determined, the world is uncertain, and you can use that uncertainty to set new ends and pursue new projects. And so the problem with capitalism and investment rule, unlike the weather, is that going back to the question of imagination, it promised this open future that we can shape, that we can use to set our ends and projects, but then because of the law of value and other things, it narrows the kind of things we can do to things that are compatible with the generation of future return. So in some sense, it promises you an uncertainty as a source of freedom, and then instead uses uncertainty as a constraint on the exercise of that freedom. So I think, that's also an important.
Let's get one last question in. Yes.
No, thank you so much. I was actually jotting down something about alienation on the first page before I'd had a chance to look at the third, so this went exactly in the direction I was hoping it would. And I think especially looking at Marx's original works, given his commitments on ideology and ethical theory, I think you kind of have to view alienation for Marx as being a sort of virtue ethical critique, or at least a critique of a diminishment of capacities. And it seems like that's what's going on here as well, and at least to some extent. And I think the question I have here is, a diminishment of capacities due to an impersonal approach doesn't seem necessarily problematic from an egalitarian point of view if we all experience the same diminishment. It doesn't necessarily seem to be problematic if we see just it like a limitation. Maybe the weather is a bad example, but a pandemic comes along, it does set our ends in some sense. A famine comes along, it sets our ends, at least towards our predisposition to survive. And I think what I want to ask is, to what extent does this account force us to think of justice not as a matter necessarily of equality or autonomy per se, as much as sort of a capacities account of justice that goes beyond sort of the liberal framework of justice as fairness or justice as fairness of equal freedom or autonomy? Is this kind of a virtual ethical way of looking at
Yeah,
justice?
no, this is great. So let me say briefly what this account owes to Marx, and particularly the manuscript of 1844, and what doesn't. So it doesn't that there is no, in this account of social alienation, there is no externalization, there is no Feuerbach, there is no objectification. There is not even, I think, a perfectionist commitment to the idea that humanity is about the exercise of specific creative abilities. But you are right that there is something about the fact that, and I think this is important, that for Marx, right, for the worker to be able to recognize themselves in the product, to be able to appropriate the product of their labor, the problem is that the division of labor do not give them enough control. The division of labor is anarchy, do not give them a possibility to understand the process as a whole. The division of labor, it means that they cannot develop an attachment to the product because they're not called to use their mental, emotional capacity, but only like to do it in. And I think there is something about that transfer to the socioeconomic realm, right? When you, as a citizen, you're not expected to use your cognitive capacity in making certain decisions. When you're not called to be involved with your agency in transformative decision, when you are so under these impersonal forces that you do not understand what's going on and where, then you can appropriate society. So in that sense, it's an analogy in some sense. It's a parallelism more than a commitment all the way down to say justice is about self-realization or something like that. But I have to say that I like the idea of joint authorship also as a creative exercise in some sense, because I think you create society, right, through, for example, through investment. So there is some of it too.
Well, as a Californian, I'm still trying to reconcile myself with the weather and its alienating properties here. But before we thank Chiara, I want to acknowledge our team that made this event possible, and that includes Maggie and Alex and others not in the room setting up for the dinner. And so, you know, at the Ethics Center, we don't maximize shareholder value. You know, first we don't maximize because there's too many continents to allow that, right? The stakeholders. But we do think about stakeholders, and we also invest in fellows like you that go on to write books. And I just was touched to hear today that after this first book, it was an interaction in the workshop, right, with one of our faculty, Katrina Forrester, that encouraged you to go big on this book. And so as much as I was ribbing you about a small and uncontroversial topic, I am delighted, and I think we all are, that you're doing something of this scale with such grace and analytic fervor. So thank you so much, Chiara. Appreciate it.
Thank you very much.